Hello everyone, welcome to this episode. First, let's focus on the gold market. Gold faced a heavy setback after opening on Monday, losing several support levels, and at one point fell below the $4,000 mark, hitting a low of $3,985 before barely stabilizing around $4,000, currently consolidating near $4,010. On the news front, the ceasefire between the US and Iran has been declared over, and conflicts over control of the Strait of Hormuz have fully erupted, with Iran announcing the closure of the strait, which directly pushed up international oil prices. Rising inflation expectations have driven US Treasury yields and the dollar higher, and against the backdrop of rising interest rate expectations, the holding cost of non-yielding asset gold has increased, suppressing its safe haven properties and prompting bullish funds to exit before the CPI data was released. In the foreign exchange market, the New Zealand dollar has continued to rise against the backdrop of a strengthening dollar, with the latest quote at 0.5779, a strong daily increase of 0.47%. After completing a bottoming out around 0.5750, the exchange rate has surged upward, approaching the resistance level of 0.5780 again. The New Zealand dollar's rise against the trend is due to the hawkish rate hike by the Reserve Bank of New Zealand last week, raising the cash rate to 2.5%, widening the interest rate differential against the backdrop of other major central banks pausing rate hikes, attracting arbitrage funds. Additionally, New Zealand's distance from the Middle Eastern conflicts gives it a certain appeal as a safe haven amid the turbulent situation. The future direction of gold, silver, and the New Zealand dollar will be influenced by the upcoming US June CPI data this week, which will reflect whether the energy shock has substantially transmitted to macro inflation. Investors should closely monitor the data and the trajectory of geopolitical conflicts and prepare for risk management in advance.